Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some stock analysis, and this is going to be on SDC, which is SmileDirect. Firstly, you want to point out we're going onto a clean chart so we can start seeing where the gaps are. Obviously we've had some in the past, all of them get filled. The biggest one kind of being here got filled quite quickly, and we're seeing that exact same pattern here. We got to get to a 668 to kind of fill the rest of this gap, but the gap fill has started, and we've only got, let's see, from where we are now we have a roughly 12% upside, and from the high we have a upside of still around 5.5%. So that's the key target to be looking at, because most likely that gap will get filled. So that's where we can see a good profit target. What also partners up with that is that it also lines up with the daily statistical mean. So it would make a large sense for it to retrace back to the 668 to 670 level, and then from there we would most likely continue down. Why do I say we're going to continue down? Obviously it could go either way, but we are in a downtrend, as you can see quite clearly on, we go onto any chart, you can see that it is quite a clear downtrend. So more likely than not we could continue this trend downwards, and if we do push further downwards, we do have buy targets at around 273 and 203. They're very obviously low end, and if you can get it there, it would be a great deal. What's more realistic would be this 438, which we did actually talk about before, buying around this 450 area when we did the last analysis on it, because we knew most likely we would come back to fill this gap, which we are kind of doing now, and start bouncing off these statistical deviations as we did here, and continuing up to fill this gap, which we are doing now. So once this gap fills, again, it's really just hard to predict which way it will go. It could quite easily continue down just because that's a trend we're already in, but it could be the end of the trend and we can reverse. So if the trend continues downward, we have a first buy opportunity at 438, and then close together we have 273 and $2 as a whole dollar. Obviously these $2 areas is quite a far way to go, and is quite unlikely, at least in the near future. The 437 though is quite achievable, and we could see that. Now if we break through the gap fill and continue upwards, where do we see it going? So if we fill and close above this 670 area, we would most likely get a strong pop of momentum. The reason for that is not only are we filling a gap, but we are on the statistical mean, and when you close above these statistical means, you usually get a strong amount of momentum. And as you can see here, you kind of got it on SDC, we're at this statistical mean, and that's where we've had the strong pop. And it will most likely happen again. If we can close above, we'll get that strong pop, and then we will be looking for price targets of around 906, 783, 1036. Those will be our main targets. Why are those our main targets? Because that would be matching it. Obviously if we went past this 1036, it would be breaking this high, which isn't as common to see in the near future, for the main reason being is it will require us to go into quite a strong new uptrend to be able to do that. So within the next few weeks, it's unlikely to see a price target of that. However, obviously we will provide them, and if it does go further up, 1140, 1290, 1375, they're all the ones that we could see. If it did get extremely oversold, which is a lot more common on these smaller cap stocks than you see on the larger cap stocks, is coming into these fourth deviations. So it's possible for them to come here, a bit more likely than a large cap stock, but still unlikely overall to come into here. So kind of our extreme target would be 1375, would kind of be our top target. Obviously that is very far away. We would obviously need to double in price to get there. So what's more realistic is just looking at the closer ones, and having kind of a 904 is kind of a realistic target. Reason for that is 783 is obviously the first deviation on the 4 hour, so most likely from there we would get a strong pullback. But if we did want to continue that uptrend and it continues upwards, 905 is kind of that key target, because that would also be the first deviation on the daily. And for us to break out of there, we would just need strong momentum to the upside. So obviously if we break out of that, then these targets are quite achievable. So more of just a wait and see. But 904 if you are looking to get long. If we get a close above the 670, a target 29 is quite achievable and wouldn't be extremely unlikely. And again, to the downside, where do we have targets? 438 is that key buy target. And if it did somehow kind of break through that and continue downwards, anywhere below that $3 is going to be considered low risk and a good buy opportunity. So that's it on Smile Direct. I hope you enjoyed the breakdown on it, and hope to see you in the next one. And that's it. Peace.